Welcome to the Mortgage Rate Weekly Market Update for the week of August 28th, 2016. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was not kind to mortgage rates. If you take a look at the bond chart on the screen, you can see that a big red candle down on Friday. That means mortgage bonds sold off. Interest rates moved higher. What caused that was the Federal Reserve had a meeting in their statements, caused the bond market to sell off. That's a big drop there below the 50-day moving average, which you can see there, and we're at the bottom of that trading channel between the blue lines that we've been trading in for the past couple weeks. We're right at the bottom there. The technical signals are for a sell sign to continue, so that's not good news for mortgage bonds. So if they continue to sell off, interest rates will move higher. So we're going to recommend locking your interest rate to start the week. Just in case, if it can reverse course and the mortgage bonds can move higher from here and bounce higher, that would be good news. But with the technicals indicating a continued sell-off, we're going to recommend locking your interest rate to start the week. Now, if we dig into the economic news release last week, we saw the gross domestic product, or the GDP, released for the second quarter. That showed an increase of 1.1% of the GDP in the second quarter. The report showed that corporate profits fell 2.4%. So growth overall still remains very anemic, not doing good there on economic growth. We need closer to 3% growth to have a healthy, growing economy. So we'll have to continue to watch that. We saw weekly initial jobless claims come out on Thursday, and claims fell by 1,000 to 261,000 initial weekly claims. That's a very good number. We've been below 300,000 for a while, so that's an indication of a strong labor market, which means the jobs report for August, coming out next Friday the 2nd, should be another strong jobs report. That could be not good for mortgage bonds, so that's another reason to lock to your rate to start the week. Because that's going to give the Federal Reserve's impetus to raise their short-term rate, interest rates called the Fed funds rate. That is what the stocks and bonds are watching. So a good jobs report is more impetus for them to raise those short-term interest rates. Now, in housing news, we had new home sales for July 2016. So that's builders' new construction homes that have sold in July, jumped higher by 12.4% on an annualized basis to 654,000 sales. So that's huge. They're up 31% from July 2015. That is unbelievable. 654,000 new homes sold in July. The median new home sales price was $294,600 across the nation. So new home sales, builders are just rocking along. We had existing home sales come out for July on Wednesday. Now, they had an unexpected decline of 3.2% to 5.39 million units on an annualized basis. But even with the drop from June, you got to realize June's was the best number in 9 years. So not such a bad report for existing home sales for July, because coming off that record number from June, you can't expect it to just keep going up. So all in all, the housing market is still going along very strong. It's still an amazing time to purchase a home. Interest rates near record lows. Home prices continuing to increase. So now is the time to buy. And if you currently have a mortgage, it's definitely a time to look at refinancing to get a lower rate, or maybe lowering your term to pay it off sooner. Now, in the local news, the next free homebuyer seminar is Saturday, September 17th at 10 a.m. That's in Newark, Delaware at the Christiana Hilton Hotel. You can register for that event by giving us a call in the office at 302-703-0727, or you can register online at www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.